Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. A few things came out this morning, and basically China announced their GDP numbers for the first quarter this year. Came out with a 7% read, bang in line with the market expectations. But this is actually a number which is falling behind, or has fallen behind what they reported the previous quarter of 7.3. Now, even more glaring is a drop, or rather a decline in the growth of, or the rate of change of the industrial production numbers. It came in at 5.6, market was looking at 6.9. Immediately we saw a reaction on the Aussie dollar, as we have seen this currency being the more sensitive of the dollar pairs. A reaction that was quite big on Monday after the trade numbers down there is actually continuing today. Now let's pull this up for a while. We are seeing the Aussie still hugging that 76 level, which has proven to be actually time and time again a key support. Whether it breaks or it holds at this level remains to be seen, but we wrote a note essentially talking about how this could be one of the more vulnerable US pairs if we see any growth indicators actually coming up from the US, which may ultimately suggest a faster move on a US rate hike down there. Something that we are definitely keeping an eye on, and we will obviously draw your attention to if any change down there. Singapore, the Singapore 30 cash has had actually quite a blistering couple of days. Not as blistering as Hong Kong, what we have seen so far, but it's certainly playing catch up down here, having broken out of this sort of triangle pattern range. One of the stocks which we have flagged in today's report is actually SIA. This chart down here shows a comparison of actually some of the airlines' performances in the region. We have seen SIA as represented here by this pink line or so, falling rather far behind some of the other comparables, namely your China Southern, namely Air Nippon Airways, your Japanese carrier, and even Cathay Pacific, one of the more directly correlated airlines, if you may, compared to SIA in terms of their profile in the region. Now, pulling up SIA stock here, we're seeing that these are Fibonacci levels that we've picked up, or the system has picked up. We're seeing that this 12, 13, 12, 15 sort of levels proven to be a kind of a resistance of sorts. If the stock can push up above this line with any firm direction, or with any firm continuation in the upside, we may see it come up to around the 1290 rather quickly. Conversely, if this indeed has proven to be a firmer than expected resistance, we could see SIA pulling back to test around the 1164, 1165 sort of range. It's a stock that we have flagged before as a potential proxy to some of the moves that we're seeing in Hong Kong, and also a proxy to the move that we are starting to see coming through to the Singapore Cash 30. Anyway, just a few thoughts for you. Happy trading.